welcome. Good afternoon. You're watching Market Fatafat on ET Now with me, Snehisha. With me, as always, is Ankita Saxena. This is a show where we'll be taking you through all the big buzzers in today's trade, what's gaining all the attention on the street today, and we'll be telling you about all of these stocks and why they're buzzing within a minute. Also, be bringing technical experts on the show and giving you a technical sense of what some of the select stocks are looking like. Before we do that, before we kickstart the show, let's take a look at the markets. And Ankita, it's not been such a great day for us, but Nifty Bank, however, is managing to hold on to some gains today.
Absolutely, Snehi, as you rightly pointed out, Nifty is trading absolutely flat. In fact, it is pretty much within the previous trading session's range, and though it has recovered from the day's lows, a recovery of 50 odd points, it is Nifty Bank that is really outperforming, the benchmark indices. It's trading with gains of it's up 120 points from the day's lows. It's trading with gains of almost 90 odd points right now. Definitely outperforming, and it is powered by HDFC Bank and Kotak Mahindra Bank that is really pulling up the index. Also, Nifty financial services are doing pretty well for themselves. HDFC Life, Muthoot Finance, SBI Life, they're all trading up with gains of 2+%. But what's really reeling under selling pressure is the FMCG pack after that business update coming in from Godrej Consumers on the subdued Q3 and therefore ensuing brokerage notes with downgrades and cuts on target price. That has put pressure on the entire FMCG pack. If you pick up Dabur, HUL, Marico, they're all trading with cuts of almost 4%. Besides that, Nifty Pharma is also under pressure because of the US Biosecure Act that has been delayed, and of course that has made all the CDMO companies in our country left in a limbo. So on the back of that, DV's Lab, Newland, Piramal Pharma, Syngene International, they're all reeling under selling pressure. But what's really outperforming right now, the broader markets, especially Nifty Mid-Cap, that is trading with gains of 0.4%. So largely a somber day of markets coming in, but Nifty Bank and the broader markets are definitely outperforming the benchmark indices for now.
Absolutely. Small cap also seems to have recovered slightly. Now it's tipped over to the greens. Today belongs to the broader markets and of course Nifty Bank as well. 2 hours of trading left. Let's see if the Nifty is able to edge over to the green as well. But before that, let's welcome on board Aditya Agarwala, Head of Research and Investments at Invest4Edu, to give us a technical check of some of the stocks that he's been highlighting for us. And from our research team today, we have Ria joining us. Good afternoon to both of you, and Aditya, thanks for taking the time out and joining us. Before we come to you, Aditya, I'm going to talk about a stock that's been seeing a lot of selling pressure recently, and it's also on the back of a lot of negative news flow coming in. That's Mishtan Foods, because they've received show cause notice by SEBI, and the stock has been down 40% in the last 2 sessions. Today also locked in lower circuit of 20%. It's also down 62% from its 52-week highs. This is on the back of a negative news flow where they've received interim order and show cause notice by SEBI. The corporate governance issues impact the company, and what does this interim order have? What's been ailing the stock so badly? For FY24, the company has artificially shown heavily inflated sales and profits figures. Fictitious sales from the Dubai arm and fictitious circular flow of funds is what the company has shown. According to SEBI, the company has negligible fixed assets on its books, negative cash flow from its operating activity, and a very low inventory as compared to sizable sales figures. What does the company have to say to this? They've totally denied all the allegations mentioned in the interim order, and they will be addressing the queries and taking appropriate actions shortly. But this is a very negative news flow coming in from the market regulator for Mishtan Foods, and the stock continues to be under pressure for a second consecutive day, locked in lower circuit of 20%.
All right, that's Mishtan locked in the lower circuit, but what's flying high is HDFC Bank. Aditya, HDFC Bank, it's a high flyer. It's trading at its all-time high. It's outperforming the markets. Tell us from here on, where do you see the stock going?
Ankita, good afternoon. Thanks for the show. Good afternoon, Snehi. I think it's just a start of the up move in HDFC Bank, which is concerned. Though if you take a look at the last 6 months' performance, it's up 19%. But mind you, if you take a look at a 2-year or a 3-year time frame, stock has just broken out from its resistance hurdle, and now it's heading higher from here on. And I think if somebody has a longer term time horizon, maybe a 6-month or a year, one should definitely hold on to HDFC Bank, buy at current levels, look for a target of 2100 to about 2200 on the upside. I have an immediate target of 2100 on the stock. On the downside, stock has immediate support at 1750, 1770 odd levels. And if I plot an RSI and a moving averages on the chart as well, both are confirming the bullishness in the stock. So I think HDFC Bank is one stock which definitely one should bet on, not only from a trading perspective, but also hold it in the portfolio. And within the Nifty 50, I think HDFC Bank is going to be one stock which is going to outperform big time in the next 6 months to about 1 year time frame.
All right, more upside seen on HDFC Bank, but moving on to another big player, which is Godrej Consumers, which is reeling under a lot of pressure and has pulled down other FMCG companies as well, HUL, Dabur, Marico, all of them are reeling under selling pressure because they're following suit for Godrej Consumer that has come out with its business updates, and FMCG names have also tanked as a result of that because they see a quarterly update which is indicating towards a subdued demand. The share price, of course, plunged as much as 10% in the quarterly after the quarterly update that came for October to December quarter. Now, Godrej Consumer has disclosed to the exchanges that the increase in palm oil and derivative prices by 20 to 30% has impacted the soap segment. Now, to partly offset the cost increases, they will be taking in price increases, reduced grammage of key packs, and reduced various trade schemes. So such pricing action typically have minimal impact on the category consumption, but do result in reduced inventory across the wholesale and the household pantry. That's what the company said, and also they added that the historical patterns indicate a normalization in volumes growth following the price stabilization, which they anticipate occurring in the next few months. Now, the company has also pointed out that the weather conditions had not been supportive, due to which the delayed winters in the north and a cyclone in the south of India has also impacted the home insecticide segment. But a couple of brokerage notes, UBS maintaining a buy with a target price of 1,050. We also have Macquarie that's maintaining a neutral but cut the target price to 1,260, and on the back of that, GCPL is in focus.
Okay, GCPL in focus under a lot of pressure right now. Brokerage notes are also sounding rather bearish. Aditya, coming to you, you've picked out Voltas for us. Now, this is a segment that's very shortly going to be seeing another big player entering. You have another big player that's going to be coming out with its IPO. Tell us what is the view on the charts going ahead, because last 1 year the stock has it's in fact more than doubled itself. Last 1 month the stock has not done anything at all. So tell us what's ahead and what's next when it comes to this stock.
It was consolidated into a sideways consolidation to a minor decline on the downside, and now it has witnessed a fresh breakout from a downward sloping channel on excellent volumes. So at current levels, I would be a buyer in Voltas. Look for a target of at least on the upside somewhere around 1900 to about 1950. On the downside, immediate support is at 1700 towards 1750. So the risk to reward is also in favor of going long at current levels with a target of 1900, 1950 inside. One should definitely look at adding onto the position. And RSI 2 has moved beyond the 60 level, which shows the strength in the stock and the likelihood of a continuation of the uptrend which we are seeing in trade today.
All right, that's Voltas on the charts. But coming to you, Ria, you picked up CEAT for us, another high flyer in the trade. It's up almost 11% in trade today on the back of an acquisition. Take us through the details of that.
Well, absolutely. So CEAT has acquired Camso Brand's off-highway tires and tracks business from Michelin in an all-cash deal valued at about 225 million US dollars, or just about rupees 1900 crores. Now, the transaction will include businesses with revenues of around 213 million US dollars, or about 1800 crores for the calendar year 2023. And CEAT is going to have global leadership of the Camso brand along with 2 manufacturing facilities in Sri Lanka. The deal is also going to expand CEAT's product portfolio, including agriculture tires and tracks, harvester tires, power sports tracks, material handling tires as well. And the transaction is also going to give CEAT access to global customer base, including over 40 international OEMs and premium international OHT distributors as well. So on the back of this, CEAT is trading with strong gains of about 11%.
Okay, very good move coming in on CEAT, but let's also go across and listen in to what the management had to say about the Camso deal, because they say it will be EPS accretive. This is according to Arnab Banerjee, the MD and CEO at CEAT. Let's go across and listen into what they had to say about the deal and the company's plans on price hikes as well.
It will be definitely EPS accretive over a period of time. Initially, first of all, it will take about 6 months to complete the deal. So we will get possession of the property, so to say, by May, June of FY26. And thereafter, we'll start consolidating this result. So initial period, there is a offtake and a supply agreement with Michelin, so that business continuity is mentioned. I think that's a very good arrangement. And when gradually we start getting control of the entire operation, it will be EBITDA accretive first and then EPS accretive. We have taken price hikes in truck bus radial segment, in passenger car segments, and In OEM, it is indexed. So in OEMs, we have got about 4% price hike roughly on an average across categories. So we would be looking up at opportunities also to take up prices in our international business.
And well, with that, it's time for us to slip into a short break. You don't go anywhere. On the other side, we are getting you some more buzzers in trade. Stay tuned.
Hi there, welcome back to Market Fatafat. Let's keep it going with all the big buzzers in today's trade. And well, one pocket of stocks to watch out for today, one sector is the pharma space. On the back of the US Biosecure Act that we are hearing about, and of this act has been kept out of the defense bill. This is expected to be positive for Chinese companies whose names were there in the bill. What's the impact going to be for us? The bill was expected to benefit Indian API and CDMO industry over the next 5 years. Indian CDMO players were expected to capture the opportunity from the Biosecure Act, and $5 billion worth of revenues were expected to flow to other companies, including Indian pharma companies that have manufacturing in US or Europe. They were also expected to benefit from this Biosecure Act. The likes of Divi's, Syngene, Loris Labs, Newland Labs, Piramal Pharma, all of them were expected to be beneficiaries of this Biosecure Act. But now that this has been excluded from the defense bill, all of these stocks are trading under some pressure, almost between 2.5–3% cut coming in across all of these names today.
All right, we'll keep with the pharma space then. Loris Labs is the name that you picked out for us. Ria, tell us what's the news flow here? I see it trading with cuts of almost 2.5% right now. What's the news flow?
Well, absolutely. So Loris Labs has approved an investment of about rupees 40 crores in its arm called Loris Bio Private Limited, and further the board has also approved the execution of definitive agreements with 8 Roads Ventures and F Prime Capital for an investment of about 120 crores in Loris Bio. Now, on completion of these investments, the shareholding of the investors and the company is going to be around 13.73% and 74.64% respectively on a fully diluted basis, and the company and the investors will also have the right but not the obligation to invest an additional amount of up to rupees 350 million rupees for the growth of Loris Bio as needed up until the 31st of December 2025. Now, nonetheless, even after this positive news flow coming in, the stock is still under a lot of selling pressure today, trading with cuts of just about 3% because of the developments that we saw around the US Biosecure Act, but still keep an eye out on Loris Labs on the back of this.
Okay, Loris Labs on to watch out for, also reeling under pressure on the back of that Biosecure Act exclusion from the defense bill. But Aditya, let's keep it going with the entire pharma diagnostic space. You've picked out Dr. Lal PathLab for us. Last 1 year, last 6 months, year to date, the stock has not done phenomenally well for itself. It's a 20% odd return coming in. Tell us what's the outlook going ahead on the charts. What are the levels that you are spotting for Dr. Lal PathLab?
So as far as diagnostic space is concerned, I think it's slightly better off as compared to pure play pharma stocks and companies. Specifically talking about Dr. Lal PathLab, stock has been into a narrow consolidation phase and looks like it's on the verge of a breakout from that consolidation. Somewhere around 3150 is where the resistances are. If it manages to sustain above 3150, stock can easily test levels of 3500 or 3600 on the upside. So that is the kind of upside that I'm seeing in Loris Labs. And given the fact that consolidation is almost over and then RSI is also trading in the bull territory, looks like a consolidation will happen anytime soon. And a positive divergence is also that I see on the stock. So overall, from a risk to reward perspective as well, I think stock does look attractive. On the downside, immediate support is at 3000 odd levels, and one can easily look at a target of 3500 or 3600 on the upside in the near term.
All right, that's Dr. Lal PathLabs on the charts. But let's move on to other set of stocks that were doing pretty well on the Adani Group. Most of the Adani stocks, in fact, it rose in early trade today. In fact, Adani Ports is still trading with gains of 1%. After Nomura said that they are the most attractive amongst India Inc., and Nomura has also said that Gautam Adani-led conglomerate will withstand the recent turmoil caused by the US Department of Justice indictment because its liquidity management has improved. JP Morgan has also assigned an overweight rating to the 4 Adani Group bonds and has ruled out any signs of stress across the key listed entities of the conglomerate, saying most of them have leverage less than 5 times, and 3 of these bonds were issued by Adani Port and of course one by Adani Electricity Mumbai, and the firm said that it was neutral on the 5 other bonds and underweight on the bond issued by Adani Green Energy. In its report, the review comes in, of course, on the heels of the charges of bribery levied against Adani Group in the US. Now, Adani Group has, of course, denied all the acquisitions positions. But on the back of these two notes by Nomura and JP Morgan, Adani group of stocks are in focus today. Adani Ports still trading with gains of 1%.
Okay, so Adani Ports looking up solid right now, 1% higher. But Ria, you've picked out NLC India for us. I believe it's a positive news flow coming in for this stock. Tell us what it is.
Well, absolutely. So NLC India has been declared as the successful bidder by the Ministry of Coal or the MOC for the new Patrapara South Coal Mine in Odisha, for which the Coal Mine Development and Production Agreement or the CMDPA was signed between NLC India and the MOC on the 5th of December. Now, the coal mine block has a total geological reserve of around 720.87 million tons with a peak rated capacity of about 12 million tons per annum. This is also the third commercial coal mine for the for NLC India, and the company has also said that it is committed towards a further capacity addition. On the back of this, the stock had gone up around 2.5% in early trade today, but right now it has given up some of those gains, but still it is up just about 1.5%.
All right, moving on from NLC India to Godrej Agro, Aditya. Tell us, what are you seeing on the charts for this? Now, if you look at the chart, I mean, the price in the last few months, actually 6 months, it has given 32% returns. But in the last 1 month also, it has moved up good 7%. From here on, where do you see it headed?
Ankita, I think it's on the verge of a breakout from a downward sloping trend line. Also happens to be a channel. A good consolidation has happened in the stock, a pullback as well after a decent up move, as you mentioned. At current levels, I think so it's an excellent buy. Can test the channel neckline, which is at 810 from current levels. That's a decent upside. A breakout from the channel will propel the stock higher to about 900 odd levels. So you can buy the stock at current levels with a decent support on the downside at 720 for a first target of 810 on the upside. And if 810 is taken out, 900 should be your next target. If you're purely looking at a trading bet, maybe 810 could be your target. If you're looking from a investment bet as well, I think this is excellent stock to hold in your portfolio for a target of 900 and a stop loss at 720. And the technical indicators are also confirming the bullishness very much intact in the stock.
Okay, so Aditya is bullish on Godrej Agro, where 900 on the upside is the levels that you're spotting out for. Let's talk about a stock that's rather pressured interest rate, and that is Star Health. Because Star Health, an allied insurance company, on Friday received a show cause notice from the IRDAI concerning alleged violations of various regulations during a general inspection conducted by them from the 31st of January 2022 to 11th February of that year. The show cause notice, which was issued on 4th of December this year, highlights non-compliance with a range of IRDAI guidelines, including the IRDAI Health Insurance Regulations, the IRDAI TPA Health Insurance Regulations, and the IRDAI Protection of Policyholders Interest Regulations 2017, among others. The company has been asked to provide a detailed response within 21 days, addressing the alleged violations and submitting the supporting documents as required. Star Health is currently in the process of preparing its response, and the management has expressed confidence that there will be no material impact on its operations or financial standings due to these issues. But nonetheless, it's a wrap on the knuckles coming in from the regulator. On the back of that, the stock is low by almost 4% as we speak.
All right, moving on from Star Health to Suven Pharma. This one's been trading down 1%. Tell us, what's the news flow here, Ria?
Well, yes, so Suven is going to acquire 56% stake in a company called NJ Bio at a pre-money valuation of about $100 million. Now, of this, $49.4 million is going to be used for buying 49.4% stake from the existing minority shareholders, and $15 million as a primary equity infusion will be mainly used for capex. Now, the GMP expansion at the existing Princeton facility is also going to be done, and the deal is being valued at a low to mid-teens multiple of the CY25 projected EBITDA based on the growth outlook. It is also expected to be EPS accretive in the next 2 years, and the transaction is expected to close before the end of December 2024. Now, Dr. Naresh Jain will continue as the CEO of the company and retain his stake in the company as well, and it is expected to be financed through cash reserves, and the acquisition is also not going to affect the current merger scheme with Cohance. Further, the acquisition is also going to strengthen Suven's position as a technology-led CDMO business, and nonetheless, the stock is still trading under some selling pressure because of the developments that we saw around the US Biosecure Act.
Absolutely, positive news flow for Laurus as well as Suven, but it is that one news flow coming in from the US Biosecure Act that has got both of these stocks and the entire pharma pack, of course, in pressure. But on that note, we'll slip into a very short break and keep it going with all the big buzzers on the other side. You stay tuned, we'll be right back.
If you like this video, then like, share and subscribe to ET Now.